We're easy come, easy go. Classic lyrics from Freddie Mercury. But unfortunately, it's also how a lot of customers are feeling today. In fact, 77% of people would rather switch brands today than they did 3 years ago. There are three main trends for this. The first is people and their expectations are changing. The need for personalization and that instant gratification. Secondly, is a rise of disruptors that are actually ramping up competition in every single sector. And then lastly, it's about deregulation, where governments are actually encouraging innovation and competition. So let's start with people. You and I, we're people. We expect more. The fact is, our expectations are more stronger than ever before, and therefore, things like Amazon redefine our expectations. The idea of speed for transaction and delivery has never been greater. Once you've experienced one-click buying and same-day delivery, you don't go back. So that need for immediacy is a new standard. The bar is irreversibly higher. And customers, like you and I, expect more. And therefore, those brands that can't meet that expectation will lose out. People are choosing choosing experience over product. If you look across many of the sectors, what we're seeing is a highly commoditized markets. Telco, financial services, consumer tech, travel. And so brands are struggling to find a difference, to distinguish themselves from one brand to another. And so it's the customer experience, or let's say the user interface, that'll actually define the experience and define a USP for customers to go after. And lastly, is recommendations do count. Brands are being put to the test all the time, and we're demanding more. First, you had the rise of comparison, where you could see different products and see what the features were and the price points. But actually, even on Facebook, we see this. Within just a few minutes, 20 to 30 friend recommendations you'll get from things like, where are you going to go on holiday? What do you want to eat? Where do you want to go to Valentine's for dinner? Or actually, even things like buying a car or buying a house. And so all of those things are actually creating visibility for people to choose product and experience. Take retail. Hundreds, if not thousands, of reviews are visible on these websites for people to see. And therefore, if you don't have a good customer experience, you'll lose out. But those that do, it's a huge opportunity. Brands are being evaluated and re-evaluated at a rate and scale that's previously unimagined. So, as people, we expect more, and businesses need to do more. The second trend, and again, it's no surprise, is a rise of disruptors. And what we're seeing is a rise of disruptors is being fueled by technology that's actually challenging the status quo faster and more efficiently than ever before. And so I'm going to give you an example of what we see on our platform, just to give you a sense of the scale this is happening. There are 70 million people on our platform that have a Facebook business page. In fact, 35,000 new business pages are launched every single day. By the time I finish here today and head back to the office, another 5,000 would have launched on the platform. The second piece is around AI. AI is playing a role in which it's actually allowing smaller entrants, new businesses to come in, find their target audience, and actually do it faster and more effectively than ever before. Who would have thought Gillette and Wilkinson Sword would have been challenged by a small brand called the Dollar Shave Club, who was sending shavers for $1 in the post. But they did. And a few years back, Unilever bought them for over $1 billion. And so competition is ramping up, and it's turning heads. And lastly, probably more importantly, is the backdrop of regulation. Your governments are encouraging innovation and competition. And it was mentioned earlier in one of the speaks, we're seeing things like Open Banking Directive, allowing brands to come in and actually challenge the status quo, challenge the CMA9, access that data via secure APIs. And we're seeing it across the entire financial services ecosystem. You look at something like Starling in retail banking, all the way through to insurance with Anorak, and then into the payments sector in TransferWise and WorldRemit. And so with brands like this, it's all about how are we evolving with the way in which the government and regulations are evolving.
Thank you for holding. One of our advisors will be with you shortly.
Thank you for continuing to hold. Your patience is appreciated.
Sound familiar? 52% of people would switch brands, would switch providers in the past year due to poor customer service. Now, up and down the country this weekend, hundreds, if not thousands of people will be on the telephone, being placed on hold, getting irate, watching their precious Saturdays drift away. And that's because it's customer experience. It's about the fact that we need to make sure that we have a flawless customer experience that removes those pain points. Now, I'm sure you'd all agree that words speak louder than actions, or actions speak louder than words, shall I say. That's exactly why the customer experience is the most powerful piece in which it can actually build or erode a brand. And in a mobile world where competition is fiercer and expectations are higher, then this is really, really important. So in the UK, the estimated cost of customers switching due to poor customer service is £200 billion. So it's critical we get this right. This is more than just loyalty. This isn't, in a traditional sense, this isn't about getting our top customers to spend more with us. It's about business critical. This is about how we attract and retain our most loyal customers in the flawless customer experience. Millennials, in particular, are expecting more. They're expecting businesses to be able to engage them in the channels that they use in a consistent manner. Millennials will make up 50% of the workforce in the UK by 2020. It's the least we can do. The least we can do is make sure that we are where our customers are. We're using the channels they're using, and we are considerate of their time. Now, actually, we're seeing these trends across our platform too, and we're witnessing this firsthand. Mark Zuckerberg recently announced that over 100 billion messages are being transferred and exchanged between WhatsApp and Messenger on a daily basis. Now, just to put that into context, SMS at its peak was delivering 20 billion per day. On Messenger alone, people and businesses exchange up to 10 billion messages every month. Now, with that expectation and customer experience changing, 64% through a Nielsen study said that they would prefer to exchange with a business and have a communication with a business as opposed to picking up the phone or having an email. And so if we want to be where our customers are, using the channels that they're using, messaging needs to be part of that strategy. And so I'm going to talk through 3 or 4 examples in which these brands have really bought into this. So this is Allianz France. The challenge that they had was about removing the cost within telephony centers. How could they try and remove that friction and reduce the speed in which they can get a quotation and a sale? And so through a simple messenger bot, which enabled them to identify who the customer was, their needs state, what policy they were going after, they reduced it down to less than 2 minutes, the quotation process. And actually, off the back of that, within 30 seconds, they were able to produce the quotes to the customer. And then lastly, from there, they were able to then send them off either back into the telephony center, but pre-vetted, or through a callback scenario. Globe Telecom, a leading telecom communications company based in the Philippines. They produced a hybrid messenger bot, 2 messenger bots actually, G and Thea. Now, G was focused on really about those customers that were existing customers? Did they have any questions around the communications plan, the phone plan, etc.? And you can see here that just the standard conversation that was happening, standard queries that would normally be answered within a telephony center were now being answered instantly through Messenger. One of the key things about Messenger is that it's persistent. And what I mean by that, and I'm sure we've all had this experience, where you've been at your desk and you're on your laptop or on your desktop, you then go and you're distracted and you're for your mobile. Messenger allows you to continue that conversation seamlessly between devices. When you're traveling home, when you're at home, when you're putting the kids to bed, you can continue the conversation. It's not something that times out and then you have to restart again and obviously experience that frustration. And again, the performance that we saw through, or Globe saw through, the Messenger bot was 25% increase in the Net Promoter Score. And they were able to actually reduce the calls or deflect the calls by 50%. You imagine what 50% looks like from a cost standpoint in those operating models, particularly when competition is getting fiercer. First car quote. First car quote was introduced by Admiral, one of the largest car insurers in the UK, and they really wanted to build a brand within the Facebook ecosystem. And that was everything from using our targeting to finding those customers, and these were new drivers, young drivers within the UK, and then building an experience that was relevant for them. Not something that had to then send them through telephony or through an online form. It was via Messenger. And it's very simple. You know, they were able to identify the car. They used an API that plugged back into some of the databases to find which car they were referring to, back to the DVLA. And actually what they saw is they were able to grow this brand that solely existed on the platform. But more importantly, and I think this is fascinating when you think about form filling, and no one that I've ever met enjoys form filling, is that it becomes a conversation. And through a conversation, you actually start to create better performance. 33% increase in insurance quotations. And from those quotations, more than a 50% increase in quotations turning into policies. And that then drove down the cost to acquire these customers, which in many instances, many brands are looking to find the way in which they can acquire more for less. Now, I thought I'd put this one in. It's not financial services, but it's one of my favorites. I'm a huge Lego fan, always have been since I was a young child. Lego, their insight, and the reason why they stepped into Messenger is that when you look at all the Lego that's available, it's overwhelming, all the different choice that you have. And actually, when you think about when you're buying it for friends or family at Christmas or a kid's birthday party, where do you start? And so Ralph the Gift Bot was invented. And Ralph the Gift Bot was invented last Christmas, and Ralph the Gift Bot still exists today. And it asks the user, what is the age group that you're looking for? What is the theme that you're looking for that you want to buy? Is it for a female? Is it for a male? The price point that you're willing to pay? And it goes through a series of these triages to actually find you then the best gift possible. And as part of this gift bot, you'll actually see the frictionless experience that then drops them back into the Lego website. So rather than having to then select it and then go off to the Lego website and then have to find it in the Lego website, this has utility. It enables someone then to move freely and seamlessly into the Lego site, and from there, the product that they picked on Messenger will actually be in their shopping basket, ready for them to purchase. So here we go. And I think the key here is it wasn't just a gimmick. It was something that actually made commercial sense and was successful in what it delivered. 3 times increase in the return on the ad spend that they were making versus when they were doing it just purely through the website. And then nearly an increase of 2x on the actual product basket value that they were holding. And again, you're creating that right customer experience for the right audience. Now, I've talked about loyalty and I've talked about the disruption. So I'm just going to summarize, really, which is loyalty is being disrupted. It's being challenged by various things. It's being challenged by disruptors, disruptor brands. It's being challenged by us, our needs, our expectations, which is constantly rising. And then lastly, it's being challenged by governments and the way in which governments are encouraging and actually trying to drive encouraging regulation to bring competition and innovation. And so our response to this is actually you need to look at customer experience. The customer experience is one of the biggest challenges that we need to solve for. And to do this, we believe it's building a fast, convenient, and a personal experience. Thank you.